Credit scores, credit scores, credit scores, credit scores. Hello, welcome to See You Walk the Money Talk. I'm Ashley.
And I'm Lori.
And this is our credit union video series where we discuss everyday money topics in your life. Today we're going to talk about credit scores. So what exactly is a credit score and how is it calculated?
A credit score is a three-digit number between 300 and 850 calculated by a third-party credit bureau to determine how likely you are to pay back your loans on time.
Think of it as your financial report card. Financial institutions use this number to decide how risky you are. This in turn determines what kind of loans you qualify for.
Anything above 720 is considered prime or A credit. If you have a low score, that means that you could be turned down for a loan. And if you're somewhere in the middle,
you still get the loan?
Well, sometimes, but you have to pay a higher interest rate. And that's not good because it costs you more money in the long run.
So what factors are used to calculate your credit score?
Credit history is the most important piece of your credit profile. It accounts for roughly 35% of your score. It makes sense too. If you've been responsible in the past, you can probably be trusted in the future.
30% is based on capacity. This shows how much of your available credit is already in use. This part is important because achieving a good score doesn't mean that you don't borrow. In fact, that can hurt your credit worse than using it often. You want to show that you can handle a reasonable amount of debt without going off the rails.
One of the more obvious components to your credit score is your length of credit history, coming in at about 15%. The longer you've been borrowing, the clearer your credit habits are. Not using an open credit card will not move your score up or down, but closing the account will hurt your credit because it shortens your length of history.
New credit accounts for 10%. This percentage refers to every time a lender makes an inquiry into your credit. These can negatively affect your score if it occurs often. Soft inquiries such as pulling your credit for a job interview, auto insurance, or other non-lending purposes do not affect your score.
And the last 10% goes to mix of credit. Having a mixture of loans like credit cards, car loans, student loans, and mortgage loans indicate that you can manage multiple loans at one time. The more diverse, the better.
So say that I knew somebody that was going to upgrade their car this summer and they wanted to make sure that they got a really great rate. What could they do in the meantime to boost their score?
Paying your bills on time should be the top priority.
Keep your credit card balances low, even if you tend on paying them off every month.
Keeping unused credit cards open, even if you don't plan to use them.
Rate shop within a focused period.
Check your credit report regularly. You are entitled to a free credit report from each of the credit bureaus every year. Space out your requests so that you can keep tabs throughout the year.
A good credit score is critical if you plan to apply for any loans. If you want to review your credit report or talk to somebody about establishing credit or increasing your score, contact your friends at the credit union. We're here to help you reach your financial goals.
Thanks for watching.
Don't forget to hit the subscribe button and follow us on all the things.
Bye.